To our episode of Foliko Stocks to Watch. Today's episode is going to be dedicated purely towards individual ticker symbols that we are looking at specifically with the power of all of our AI data, with the power of everything that we're doing in our own analysis. So myself, I'm a career data scientist, bringing in that experience, and I'm joined by Tyler Tucci, who is a former hedge fund PM, currently the head of research for Cinerai. Now, we have some exciting announcements. If you were tuned in last week, you know that we had mentioned that we're going to do some formatting changes to our show, which included breaking the show up into individual segments. So that brings us to Thursday, which is Stocks to Watch Day. It will always be the day that we lay out individual tickers that we're interested in. Another announcement that we made last week was that we are releasing a new version of Foliko, which is called Foliko Lite. Now, what I'm so excited about in Foliko Lite is we've taken a few features out of it in order to bring it to you, our audience, for free. Absolutely for free. Completely, no strings attached, free. You don't even need to sign up or make an account. You just come in, click on the links, and you're immediately going to be getting value. And what I love about this is for the first time in the show, no matter where or when you're joining us, you're going to be able to come in and look at the exact same data that we are looking at. So where do you find this? Well, for today, as you're watching the show, look in the description below. In fact, I'm going to show you what this looks like exactly. I will share my screen. This is what the YouTube studio view that I get looks like. But you'll see here's all the tickers that we're going to be talking about today. We're front loading them for you. You don't even have to watch the entire show. You can come in and just start playing around with those tickers. Watch the show if you want details for when, why, and how we're going to be trading these tickers. But you click on any one of these links and you're going to go to Foliko Lite and start looking at the exact dashboards that we look at. Now, I'm going to lead you through a few things because this is our inaugural show. I want to show you exactly what this is going to look like. Let's say I clicked on AbbVie. That's going to lead me to this, what we call right now snapshots. That's a working title. But this snapshot is going to allow me to come in and see a very quick view of how this company has performed in the orange line in the past 6 months. And in the blue line, our artificial intelligence models are coming in and projecting 7 different data points that range everywhere from one day, that is tomorrow's closing price, okay, all the way out to 12 weeks from now. So 12 weeks, AbbVie projected to be at a price of $123.47. That 12-week price, the estimation from the AI model is going to change as new data comes in, as new news articles come in, as the AI is looking at the environment around it and the investing conditions elsewhere in the world. You can come here and see our health factors for today for this company. You can see that AbbVie is suffering in reputation, but earnings power looking a little bit positive. You can see what are the biggest issues facing AbbVie today. Dive into those. You have this other tab up in the top right-hand corner, health factors, and you're able to come in and see the health factors. This is the intention of this program today is not to go through how Foliko Lite works, but I just wanted to show you as we're running through these tickers today, you can come in and see exactly the view that we're seeing and make your own judgments about how these stocks look and potentially add them into your own portfolio. We are not financial advisors. Please invest responsibly. Take in mind your own risk tolerances. And anything we share today, please use it, share it, spread it forward. If you like our show today, give us a like, subscribe, or share these links out. That'll really help us out going forward. So with no further ado, Tyler, how's the market looking today?
Yeah, this is kind of a weird one. We, as we keep saying, we had that big pal puke down to below 4K.
And now we're just, I like that.
Now we're just kind of hanging out. I don't know. It's definitely kind of a mixed bag. We're looking towards, I think CPI comes out, I believe it's the next week on the calendar. So that'll be the next look. I believe the Fed will, of course, be in blackout. Well, they're always in blackout, but specifically this time they'll be in blackout. And they won't actually be able to comment on the number. So that'll just, this will be a, fantastic lead into the September meeting, where the most recent intelligence is it'll be 75 basis points. So that'll be, This is quite historic. I mean, basically, if you look back through history, the Fed cuts roughly 3 times quicker than they hike. If you look at the ratio of 75 bip cuts to hikes over, the pre-Powell Fed, I think it was something like 3-1, or if I'm not right, I got you about 90% of the way there. I mean, this is over and over and over. So this will be quite something. This will really test the mettle of any stability that we've started to put in the market. This will kind of be a show of, okay, so, check out this another nearly 100 basis point hike. How are you going to take that, especially with the front end getting up near 4? But enough of the macro fail. I mean, I think really the most important thing today is these links are now live, and this is something that we encourage everyone to use with or without us. Like Travis said, you can just grab these links and go. You don't have to watch the show. We'd love you to. But I think now we've kind of given at least your opening foray into looking at our data and how I then use the data on the show. This also allows you to just get comfortable with all the tickers, all the names, track it. I believe there'll be another link coming out that's just basically a search engine for stocks, essentially.
Well, you don't even wait for that link. Come in here, click back to search, and you can come in here and put in any ticker that's on our coverage list. Over 1,000 companies you can search.
We didn't plan that, by the way.
Microsoft. What's that?
I said we didn't plan that, by the way.
So, come in, take a look at whatever ticker you like. You can come down here and share. If you see something interesting, you want to get on TradingView and share your idea on that basis, great. Come in, click the share button, get a nice, easy to share hyperlink, and you're good to go. All right, but this is not a Foliko Light show. This is a ticker show. Let's get into our first one. What are we looking at today, Tyler?
So I had been really thinking about, we had started with looking 2 or 3 weeks ago about the relationship between gasoline prices and US equity indices. Basically, the thesis was we could broadly measure the choke on the consumer just by the gasoline price, and therefore kind of assign a negative premium to equities. So I kind of like that. I think, in terms of a mental model, that's decent. In terms of reality, that, we're not even halfway there. But it kind of did bring me to the thought about a lot of people looking at gasoline, natural gas prices, things like this. That's starting to seem like the worst is priced. So it started with a UNG short last week. That's done quite well. I still own a few. But I'm out of the trade. The profit's been locked. I'm, like I said yesterday, I'm gambling at this point. So, whatever you want to do with that is fine. So from there, I thought about, okay, so how can we turn this into a sector or a ticker specific play? Because sometimes when you're looking at a commodity trade, the single name commodity linked names will have different, the volatility implied in the options premium could be different. You are taking different exposure, to be totally clear. If you're long gold and you're long gold miners, they will perform differently for a whole bunch of reasons. But sometimes at certain points, you can make a judgment that they're going to perform the same. I am making such a judgment right now. So what I did was I looked at basically a couple names that were candidates. This one, Southwest, it's a lower price ticker. So maybe I'll show you guys this one, even though it's not listed, because I think it's just as important to kind of go through how
Southwest Airlines,
Southwest Natural Gas.
Oh, okay. Southwest
Energy Company. It's a natural gas company. Came back from the dead, in fact. And this is how I use Foliko. I kind of start about thinking about the market all up, and then I look for where can I look for specific exposures or edges with what Foliko is giving me. So we'll start with Southwest. So I looked at that, and I'm showing you this because it's to my understanding that there is a large group of the trading community out there who likes to trade lower priced stocks. The notional price is lower. So this is why I'm sharing this one with you. This one's for you, a potential short, not something I'm involved in, but this is, me doing my best to respond to feedback. So this is one that you might consider. For me, And this one is linked. Coterra. And we do have another wind beneath our wings on this. A gentleman whose name rhymes with Framer pitched this as a long. So you already know. But if we didn't have cable, let's just see. I mean, minus 15 over the next month. That would seem appropriate. That would seem kind of in line with the market bottoms. Energy prices come back lower. The things that have been working, I keep talking about the things that have been working stop working. So that would mean XLE, that would mean XOP, OIH, things like that start to come back to earth. I think natural gas is just the most egregiously mispriced out of all of them at the moment because there's just so much macro tourism. So I think we could get this thing down to 5 in short order in NG1 futures.
How long does this position or view on natural gas last? I mean, surely it's not going to carry us into the winter, is it?
I mean, but because you say that, exactly that, you know what I mean? Like that's the thing is why not? And by the way, like I said, I'm out of 80% of this trade. I still have a few. It's not like I wouldn't add, but now I've moved to a natural gas name because I think it will have, if the market stabilizes here, I don't think those names continue to do well. That's just my own thesis, and it's actually quite supported by Foliko's price targets. And yeah, I mean, look at this. So, I mean, that's a very interesting one for me. I definitely like short expressions on that one. Again, not a financial advisor. This is just me showing you how, in my time here, I have used Foliko to use as both a research system and something of a when platform, right? Where you want to do the research and then you want to know when to get in the trade and you want to know when to get out. So this is kind of my quest to start to answer those questions for us and for you.
That makes sense. All right, so we've got Coterra as a good representative ticker for the natural gas view. What other sectors are you looking at, Tyler?
So this one is less for things I'm looking to trade and just things we need to watch very closely at the moment. So we just have...
And let me just double down on that and make sure it's really clear for our audience. This is stocks to watch. A lot of times we see some really cool opportunities and we're going in and saying full-throated, this ticker we're putting into our portfolio. But I think, Tyler, you just made the specific call out. This is a literal stock that we're watching. We might take the opportunity to get in if the conditions line up just right, but we're actually waiting and watching for a little bit. And the specific reason, I'm going to go back to faces for a second. The specific reason on this, the market's really funky right now. Tyler, do you happen to have that short graph that you showed me last night? The institutional puts. And
yes, but I can't share that. That's somebody's proprietary data. It's available. It's available and it's out there, and they published it. But I'm not sure I can.
I saw it on LinkedIn, so I'm going to share the graph that I saw on LinkedIn.
Okay, fair enough. I just don't want to step on anybody's toes ever.
In other words, though, if we're describing it, and I'll find it here eventually. If we're describing it's the institutional investors have hedged more than they have, even more. It was 3 times more than 2008.
But if you adjust for market, the market size, because that's not fair. Okay. The market's much bigger between 08 and now.
Okay.
It's about the same as 08 is basically their takeaway.
Which in 08 was full 2 feet on the brakes. Right. So you can't get more than 08, in other words, right?
That's the hope. I mean, otherwise it's mud huts and fires for all of us. Like, you know what I mean? Like that's the scary thing, right? Like below that is who knows? That's the problem is, but yes, if you use that as your bound and, assume that civilization isn't going to just get, wiped out, which, not a good bet, zero hedge. So back to what we were talking about. So I'm watching European banks right now. The ECB raised 75 bips this morning. They are the tail's completely wagging the dog. That thing is an out and out disaster. If you like central banks, you like watching that because it's like a Harlem Globetrotters game. It's just a debacle. Okay, there it is.
So this was from Tuli Urbach, who it was Nathan Somos that commented on it and brought this to my feed. But you can see in that graph there's 2008, and apologies, I can't zoom in more than this, just the way LinkedIn works. But you can see here the amount of hedging happening or puts purchased last week.
Right.
And in size, it's larger than 2008, but given market size, it's roughly the same percentage. Is that right?
Yes. Always adjust for market size. These graphs will always give you wild outcomes because the market has just grown. It's just continued to grow. I think someone told me BlackRock's AUM is up 7 times. So there's actually a chance that this is actually useless. On a market cap basis, it is correct, but there are lots of other holes that can be poked through that. So that's just one thing. But as I said to you, when I sent it to you, these are not things that show up at tops. These are things that show up at bottoms. So these are things we are starting to, in our own mental scorecard, be like, check, the really nasty headlines, doom and, the nastier the doom and gloom, the closer we are to the bottom is usually how that works.
And so that the main point being here, the reason why we're not going to say a specific action on this is because market conditions are a little bit wild right now. It might be a smart move to de-risk or exit a little bit, wait and see. Tyler, as one of your famous sayings is that I hear you say all the time, there's more than 200 trading days a year. You don't have to act on this one. But these are tickers that we are actively watching. And so what I want to do, Tyler, if this works for you, we didn't plan this, but in 10 minutes, can we go through the roughly 10 tickers that we have supplied in the description below? And what I'd love to hear from you is why is it on the list and what would you watch to make it a definitive move to the buy or sell?
Okay, so we'll start with the ones that I'm these two. I'm using this as more of a market gauge than am I going to trade this? These are European banks. Like I've said, we've had the energy disaster, which is tied to the energy companies, which are tied to banks, right? So it's just a giant margin call for everybody, for lack of a better term. The ECB is now hiking rates, so borrowing costs are actually going to be zero, or God forbid, positive in Europe. So imagine going from getting paid to borrow to paying to borrow. This is kind of what we're watching. This is DB, once heard them called the sick man of Europe. So this is like who you watch as the canary in the coal mine for, are things going to start to get better? Price target says no, not really. So we'll go over to CS.
Now, systemic is improving a lot since May, but we're seeing the core 4 just absolutely degrading over the past month, especially.
So this is a little better. Some near-term strength, and then not so much. But this is a problem. I'd like to see things start to curl up here, either in price forecast or health factor. We're not really seeing that in either DB or CS. We're seeing it slightly more in CS, but still, not really great. Let's see. I've walked you through Coterra. Another one that I have my eye on is McDonald's. This one is hanging out at all-time highs. It's performed really, really well. It's been one of those hidey holes where, when risk is generally off, you can jam in there, collect a dividend, and the price performance has been very good. But I think, especially since this is going to be, if we have a recession, it will be an inflationary recession and not a deflationary one. So that will be a unique feature to McDonald's, because it's traditionally been thought of as a positive performer in recessions. But I believe if you look at, it was the 70s, McDonald's stock price did not appreciate from, I believe it was 71 to 80 at all during that time of inflation. So I don't think that's an unfair comparison to make, because the price of everything for McDonald's, which is a value platform, is going higher. Labor higher, food higher. Everything is moving against them. So that's one I'm watching. That is one I would like to short at some point. I'm watching it on the short side. We just don't have I want to see out and out bearishness from the price forecasts. I mean, that's pretty good. That's all rolled over, but I'd like to kind of see the price forecast roll over to confirm. Technically, it's starting to get into a good location here, about 260. So this is probably like the on deck circle for my shorts, if I had to use a baseball term.
So one thing I want to point out here, and I'm going to steal the share from you for just 1 second, is if you go to the 10-week, you look at its core 4 factors, and you see reputation is the one suffering the most, while earnings power is still basically hovering at the same level. They hit this level in late April, and they've been hovering ever since, right? If we take out the health factors, we see that the stock price has mostly been hovering around that same, with some peaks and valleys here and there. I agree with you that I think that this has been a shelter from the storm for a lot of folks. Fears of recession pile into McDonald's. But here's where I see potential problems. So you go in and you compare the core 4, but then you compare it against its systemic backdrop. And systemic bottomed out here in the mid-May timeframe, and it's been improving ever since. So if the core thesis is that McDonald's has been a safe haven for people to run to hedge against a recession, well, as those systemic factors are starting to improve, and yes, I know that the Fed has given off all these really gloom and doom signals, things are looking rough in Europe and things like that, but the question remains that at the darkest times, is that the time for the turnaround? And once that the whole background systemic factors turn around on McDonald's, my big thought and thesis on this company is that all the air will be let out from this being a safe haven and a refuge, and it will sink and revert back down to the levels of those health factors, which have been hovering low. This has neutralized, and it's been staying level on a plateau, but that's a low plateau. And so I think that there's this dichotomy between where the price is and where the health factors are, and that's going to need to resolve at some point, which is why I agree and concur for myself. This would be one of my biggest, how'd you call it, the lineup for the short factor?
The on deck circle.
The on deck circle. There we go. Yep.
So what else? Okay, so also in the on deck circle, I hit this one a couple weeks ago off the 151 highs, and then the break of the 200 DMA. We're probably, in my opinion, you don't want to short it here. You want the deck to reshuffle. I believe the 200-day moving average is up near 144. I have some other important levels up there, so I'd be looking to sell against 144. I think this is another one of those that has performed very well. That they're going to let some air out of. They've already let a bit out of it, but I think 125 seems reasonable. Foliko concurs.
Let's see. I'm just pulling up the health factors here on it.
Again,
now, what do you think of this repairing their health factors between May and August?
That was largely a function of, I wonder. So that was, they had one of those sell the news earnings, I believe. They had solid earnings, but everything just went straight down.
If you only keep in earnings power there, look at that divergence that opens up in mid-July. Right here. You come mid-July, all of a sudden, boom, you're seeing a real skew between where the price is and where the earnings power is. In fact, earnings power is hovering positive. Could there be a case that AbbVie is actually ready to start turning around from this downward slope since April?
I mean, it's certainly possible, and we've seen that those alligator jaws, when they manifest, are powerful, right? So, I'm definitely not going to rule out that possibility, especially given that spread, especially given that it's smoothed out. That's the other thing that I think and I think most people with a technical background would agree quickly with me. As you zoom out, the signal gets more powerful. A 1 minute signal is less powerful than a 1 day signal, which is less powerful than a 1 week signal, which is less powerful than a 1 month signal. So as you start to really smooth out, oh, okay, so not only is it over the longest signal, it's over the shortest signal. So we have confirmations across 5 signals. So that's even better.
Yeah. And look at how this has been leading. We have a plateau right here. Earnings power starts decreasing, and all of a sudden this stock just runs off a bridge. We cross again here late June. Earnings power is saying there's strength there. Let's see what's going on in the other factors. Reputation is the one
that's it's a up. Biotech company. Show me a biotech company with a good reputation.
For comparison, what biotech company do you think would have the best reputation score? I'll start looking that up while you go to the next ticker.
Oh my God.
Who acquired Celgene?
Was it BIIB or REGN?
Let's see. Reputation, yeah. Oh, wow. Regeneron is just not sitting well at all. And this is interesting because comparing like to like within the same sector, and this is a different picture from AbbVie entirely.
Which we like to see. Like that's also what I think is important when you're looking at specific names. You need to compare them to the other names and look at not just how the health factors have diverged from price, but how the health factors have diverged from each other. How does Regeneron's earnings power look versus ABBV, look versus BIIB, look versus mRNA? You know, and from there you can start to make relative opinions in addition to outright opinions, which I think is important because the more data you use and look at here, the better this performs, in my opinion. Just pointing and shooting at one without any context is not how this was meant, to be used.
Have you been looking at AbbVie as a short or a long?
I had been looking at it as a short. I'd been shorted. I'm not currently anything with it. I was looking to reshort it, but that doesn't necessarily have to be the case. If that's not the right thing to do, I'd rather have the money than be, right. So,
well, I mean, given what we've talked about today, I'm thinking about a 2-month long on it. I might add that. In fact, you're hearing it on the show today. I'm going to go and add that in.
57 days until earnings, according to TradingView. So that's exactly if you bought a 60-day option, you would catch earnings. So that's interesting. We're just thinking out loud here.
I like it. I'm gonna submit that today. In future weeks, you'll have the pleasure of seeing whether or not that works. All right. And what else, Tyler? What else do we have to look through? We only have a couple minutes to wrap it in here.
Just really quick, we'll go through them. So UNH I'd been looking at as a potential short, same thesis as ABBV and McDonald's, and CTRA. Really, the things that have been working will stop working if we have a sustainable bottom coming, is basically kind of the thesis. And that gives you still some optionality on the short side, where if the market just completely washes out, you probably still do okay. But really the view is market, it's sort of stable. And let me show you. United Health, Foliko thinks so too. Health factors, not great. And that's interesting too, because we're going to get some crosses from a positive Z-score to a negative Z-score. So I think that in of itself is somewhat descriptive as all this rolls over, with systemic just absolutely buried.
So I'm gonna throw this in as a lower third, Tyler. I'm standing my ground.
All right, no, I like it, and this is how Foliko is meant to be used, to take the research from just research to, okay, so now what am I going to do about it? How are we going to try to make some money?
Now, what's interesting about UNH there is how systemic is degrading, whereas every other company we've looked at, systemic has been improving. So for United Health, what would be really interesting, and we don't have the time to do it today, but what would be interesting is to go into the most direct competitors of UNH and see if they also have degrading systemic backgrounds. Now, a reminder of what this factor is. This does not look for specifics on the company, but it does look for all the news where the company is mentioned. How does the economy, how is the economy and macroeconomic factors talked about in the context of that company? So while it's not talking specifically about it, it is in the locus where that company is talked about. And so you look at Cigna here, and it doesn't have the same issues with systemic. So now we've got a few theses going on that we've got to start to peel apart. So for UNH specifically, why would systemic be a negative factor? So let's go in, start looking at those news articles and peeling that apart. That's why we give those news articles on the right. You look at the lines, you form a thesis, and then you go and double down and say why on the articles with the right. And once you peel apart and answer that question, immediately you're given some investment ideas on how you're going to act on that and what your time period would be. All right, we've got to run. Tyler, any last thoughts before we close out?
Probably only going to do 7 tickers next week.
That works. All right, everybody. Thank you so much for joining us today. We hope you have a lot of fun with the Foliko Light links in the description below. Again, clicking those and sharing them out with your networks, giving your investment ideas with those in mind really helps us out a lot. Thank you so much for coming in and supporting the channel. We'll see you more tomorrow when we're back for Foliko Live / that Foliko Quant Bent that we had talked about before. Thanks all. We'll talk soon.